With the recent influx of layoffs at big companies like Google, Microsoft, Amazon, and Facebook, many of us have been left wondering about the future of our jobs and finances. In times like these, it's important to turn to experts who have experience navigating financial crises. One such expert is Robert Kiyosaki, a well known author of the best selling book Rich Dad, Poor Dad, and a personal finance and entrepreneurship speaker. Kiyosaki has been warning investors about an imminent market crash, and his predictions have become more urgent in recent months. He believes that the current economic situation is unsustainable, and that we could be headed for a major recession. In this video, we will comprehensively cover Kiyosaki's warning and the measures he recommends to protect ourselves. Specifically, we will focus on his advice to not keep cash in the bank and to invest in an alternative asset instead. We will delve into why this is a good strategy and how we can put it into practice. So if you want to stay ahead of the curve and secure your financial future, stay tuned for the rest of the video. Kiyosaki's recession warning. The global economy has been on a roller coaster ride in recent years, and many experts are warning that the future is looking bleak. One such expert, Robert Kiyosaki, has been warning about the looming negative future of the global economy for some time now, and his latest warning is that a crash is inevitable. On February 10th, 2023, Kiyosaki took to Twitter to respond to the global recession and warned investors that everything will drop. He stated that the current economic situation is unstable, and the crash is not a matter of if, but when. This warning comes as no surprise, considering the recent economic events worldwide. In the tweet, Kiyosaki issued a warning of an upcoming economic disaster, comparing it to the infamous Valentine's Day Massacre, carried out by gangster Al Capone in the 1920s. Kiyosaki cited Stansberry Research's prediction and declared that everything will crash, including prices of gold, silver, and Bitcoin, but urged his followers not to panic. In fact, he saw this as a great buying opportunity and stated that he was planning to purchase more of these assets with the real money he has earned. To further emphasize his point, Kiyosaki drew attention to the mass layoffs that occurred in the IT sector in 2022, where more than 144,000 people were cut off from their jobs. He believes that this is a clear sign of a looming economic disaster, and that it presents an opportunity for investors to buy the dip and increase their holdings. Kiyosaki is not alone in this approach, as other notable crypto investors are also taking advantage of the market downturn to acquire more assets. Last year, in July, Kiyosaki issued a warning about the potential consequences of inflation. He pointed out that real estate prices were plummeting and layoffs were beginning to take place. In April, he expressed concern about hyperinflation and predicted that the US dollar was on the brink of collapse. And in May, he reiterated his grim outlook, stating that a depression was looming. However, Kiyosaki is not the only one sounding the alarm about a global recession. The World Bank also expressed concern in September of last year, stating that the risk of a worldwide recession in 2023 was increasing due to central banks simultaneously raising interest rates in response to inflation. The International Monetary Fund, IMF, has also warned of a challenging year ahead for the global economy. Kiyosaki's warning about inflation leading to a depression is based on the idea that when prices rise, people tend to spend less, which can lead to lower economic growth and eventually a recession. He also pointed out that the failing real estate prices and increasing layoffs were signs that the economy was already starting to suffer. Kiyosaki's concerns about hyperinflation and the collapse of the US dollar are linked to the country's increasing debt levels. He argues that the government's policies are unsustainable and that the dollar's value could plummet if the debt becomes too great. This could lead to a global economic crisis. Factors that pose a high economic threat. Kiyosaki's latest warning comes at a time when the global economy is already facing a number of challenges, such as debt, inflation, supply chain disruptions, and geopolitical tensions. The first factor is debt. According to Kiyosaki, debt is one of the biggest problems facing the economy today. He argues that both individuals and governments have taken on excessive debt, leading to a fragile financial system that is susceptible to collapse. The consequences of excessive debt can result in an economic recession, where individuals, companies, or governments are unable to service their debts, leading to reduced spending, decreased economic activity, and ultimately a recession. For instance, if many individuals or companies default on their loans, financial institutions such as banks may suffer significant losses. This can lead to a credit crunch, making it difficult for businesses and individuals to access credit, which can exacerbate the problem. If this scenario becomes widespread across several countries, it can result in a global economic recession, as was seen in the 2008 financial crisis. The second factor is inflation. Kiyosaki explains that sustained increases in the general price level of goods and services over time can result from an increase in the money supply, a decrease in the supply of goods and services, or an increase in demand. The third factor is economic imbalances. Kiyosaki is concerned about the growing gap between the rich and the poor. An unequal distribution of resources or wealth within an economy can lead to instability and insecurity for some groups. When wealth is concentrated in the hands of a few, it can lead to decreased consumer spending and ultimately a recession. Income inequality can also contribute to a lack of social mobility, leading to decreased productivity and innovation in the long run. The fourth factor is external shocks, which can be caused by pandemics, natural disasters, geopolitical events, or other unexpected changes that disrupt supply chains and impact the economy. The COVID-19 pandemic is an example of an external shock that has significantly impacted the global economy since its outbreak in early 2020. Many countries implemented lockdown measures to slow the spread of the virus, resulting in the closure of businesses, reduced consumer spending, and increased unemployment rates. It also disrupted global supply chains, and several impacted the tourism industry. In addition, the pandemic highlighted existing economic inequalities and weaknesses in healthcare systems worldwide. Although most countries have lifted these measures, the global economy has yet to fully recover from the pandemic's economic effects. Geopolitical events such as trade wars or conflicts between nations can also significantly impact the global economy. The ongoing conflict between Russia and Ukraine is causing economic disruptions in those countries and other parts of the world. This conflict is a major factor, causing the ever-increasing global oil prices, as Ukraine is a major transit route for Russian gas exports to Europe. The current USA and Europe sanctions on Russian oil and the disruptions to the flow of energy are also causing a significant shortage of the product, hence driving up the commodity prices. Therefore, these events can disrupt global trade and cause uncertainty, leading to reduced investment and slower economic growth. The fifth factor is policy failures. Poorly designed economic policies, corruption, or ineffective implementation of policies can also lead to economic problems. Inadequate regulation of financial markets, fiscal mismanagement, ineffective trade policies, or insufficient investment in infrastructure and education can contribute to economic instability, inequality, and recession. Lastly, Kiyosaki believes that a lack of financial literacy is a significant problem in the economy. Without financial education, individuals may make uninformed decisions based on emotion rather than sound financial principles, which can contribute to market volatility. A lack of financial literacy can also contribute to systemic economic problems if a significant portion of the population is unable to repay their loans, impacting banks, financial institutions, and the overall economy. Solution: investing in assets. Solution: investing in assets. Kiyosaki is a firm believer in investing in assets as a means to secure your financial future. He believes that investing in assets that appreciate in value is one of the best ways to build wealth over time. In contrast, accumulating debt can lead to financial ruin and limit your ability to invest in assets. Therefore, it is crucial to avoid excessive debt and focus on building up your assets. One of the ways to ensure that you have the financial flexibility to invest in assets is by building up your cash reserves and reducing your debt levels. Kiyosaki advises individuals to have at least 6 months of living expenses in cash to cover any unexpected events such as a job loss or a medical emergency. By having a financial safety net, you can avoid dipping into your investments during difficult times and give your investments time to appreciate in value. During a market crash, having cash on hand can be incredibly significant. Kiyosaki believes that market crashes provide opportunities to invest in assets at a discounted price. If you have cash reserves during a market crash, you can take advantage of these opportunities to invest in assets that are likely to appreciate in value over time. Kiyosaki recommends investing in tangible assets such as gold and silver. These precious metals have a history of retaining their value during times of economic turmoil, making them a popular investment choice during market crashes. According to Kiyosaki, silver is a preferred investment option, and he recommends it highly. In fact, he tweeted in October 2022 that silver best investment in October 2022. And everyone can afford $20 silver. Although precious metals did experience a sell-off in 2022, silver coins have shown promise in 2023, with a 5% increase over the past few months, and may now be worth $30 per coin. While there are numerous ways to invest in gold and silver, Kiyosaki prefers to purchase the metal directly. In early 2022, he tweeted that he only wants real gold or silver coins, and not ETFs. This strategy allows him to have complete control over his investment, which he believes is vital. Recently, the author also referred to silver as a bargain, indicating that it might be a suitable time to visit a bullion shop and purchase some silver to secure one's future. If you enjoyed this video, guys, make sure to subscribe to the channel, like the video, and watch this one as well.